Well, welcome everybody to today's session. I'm actually quite excited to be joined today by two colleagues in different parts of the continent. So I think it will be a promising session. My name is David Akinen, and I will be today moderating this discussion around financing housing with diaspora investments. And I really want this discussion to be between my colleagues. I want to encourage them and kind of bring in some topics, and we will see where it goes from here. It is a pre-recorded session. It's been announced on the agenda, so definitely we will make sure that they can maybe disclose some of their contact info, or you will find them on the program, and hopefully be able to reach out to any of us around the topics that we'll discuss today. I am working in Namibia. I run a company called Atenu Developments in construction of affordable housing for about 7 years. I'm originally from Venezuela, and I've been working recently on Operfin Technologies, which is a fintech that has been trying to bring more housing finance to people, at least in the Southern Africa continent. And I am joined today by two colleagues. I would like to maybe take a few minutes to introduce them. And then give them a chance as well to say it. So we'll start with Mehluli. Mehluli Mpofu is currently the managing director, I believe. The bio said deputy, but I think he's the managing director. You correct me, Mehluli? Is that correct?
That's correct.
Yes, so he's the managing director for the Central Africa Building Society, and it is the largest building society in Zimbabwe. He's also the current chair for the Zimbabwean Association of Housing Financiers. And he's an experienced investment professional. He's worked for the Old Mutual Group in Zimbabwe, originally as an investment analyst. And towards the end of that track of his career, he was also the managing director of the group's investment business in Zimbabwe before joining CAPS. He holds a charter in financial analysis, as well as an MBA from the University of Cape Town's GSB, the Graduate School of Business. So we're a bit colleagues there. I did an MPhil in inclusive innovation on housing. And he studied electrical engineering at the University of Zimbabwe. Have I covered, Mehluli, your bio? Have I missed something essential there?
No, that's it, David. Thank you so much for that introduction. Thank you.
Cool. And then I'm also joined, and I'm also very honored to be joined by Johnston. He is the CEO of the Kenya Mortgage Refinance Company. He's responsible actually for the establishment and the operationalization of the company. The KMRC, and I know this also from my experience, has a big task ahead. It is a new organization, but with a huge market and a huge potential for it in what it's doing. It was established with the principal objective of addressing the long-term funding constraints hindering the growth of the primary mortgage market, and also reducing the funding cost of residential mortgages and the availability of housing finance to Kenyans. The company is actually one of the key enablers of the affordable housing pillar of the government of Kenya's Big Four agenda. About Johnston, I would say that from 2017 to 2019, he held the position of the Senior Financial Sector Advisor at the National Treasury of Kenya. He was also responsible for policy matters relating to banking, microfinance, capital markets, pensions, and insurance, amongst others. And prior to this, he was actually the manager of market supervision at the Capital Markets Authority, the CMA for Kenya, for about 15 years, responsible for oversight of listed companies, securities exchanges, central securities depositories, asset management companies, investment banks, and others. He is a certified investment and financial analyst, and he holds an MBA and a BCom degree. He is a member of the Institute of Certified Investment and Financial Analysts, the ICIFA or ICIFA, and also the Institute of Directors of Kenya. He's an alumnus of the Harvard Kennedy School, holding a certificate in innovating public policy and service. So as you can see and hear from my introductions, we're joined by colleagues in, I would say, the Eastern Africa region, and and Zimbabwe, representing here also the Southern Africa region with myself in Namibia. And I hope that this will lead to a nice discussion. So now that I've given some introductions about both of you, and maybe just mentioned the topic that we're joined today about financing housing with diaspora investments, I wanted, before we kick off, that maybe Johnston and Mehlui, you can try to give me and some of the colleagues in the audience some background about affordable housing finance in your country. So maybe we can start with you, Johnston.
Thank you, David, for that introduction. I'm very glad to meet the colleagues, David and Mehlui. I think after the conversation we had in South Africa last year. Now, briefly, affordable housing in Kenya is a very recent discussion. Not to say that housing has been obviously alien, but affordable housing has become very key recently in Kenya. When the government of Kenya decided to have two key agendas for this, I think, 4 years, not least affordable housing was one of the key. Now, when you look at affordable housing in Kenya, generally housing in Kenya has been a challenge. It has a deficit of about 2 billion units, with the deficit increasing by about 200,000 units per year. We have only about 50,000 units being provided here, mainly targeting the to high income categories. There's very little, in terms of the lower middle income, and that's why the issue of affordable housing then became important. Now, when you look at the mortgage market in Kenya, it's very tiny compared to its peers around the region. We only have about 27,000 mortgages in the country. However, there are quite a number of houses that have been issued, but not necessarily having necessarily being mortgages. Now, with the 27,000 mortgages around the country, and about that represents about, in value terms, about 2.7% of GDP, which when you look at carefully, it's really, really tiny. It doesn't really play a significant role. Now, when you look at the typical mortgage rate in Kenya, we have had fluctuations in that, but over the last 3, 4, 5 years, we've had a mortgage rate of 12 to 30%, and that is more contributed in the recent past by the fixing of interest rates in Kenya, which was done since 2016, and it was only lifted last year. But that did not significantly contribute to the growth of mortgages in the country. Of course, that appeared to be more of a subsidy, but that's, in many cases, the most inefficient subsidy.
Johnson, let me just jump in quickly. You said 12, I may have heard it wrong, but did you say 12%? And if that was it in local currency, those rates?
Yes, it's 12 to 13% in local currency.
And what is the tenure of those mortgages? How long are we seeing some of those local mortgages being given for?
So on average, we have about 8 to 10 years. So that's the tenure on average.
Cool.
But we have institutions that are...
Yeah, great. Sorry, I interrupted you. I just wanted to make sure I caught that nicely because I want to bring it in when we go forward. And can you maybe, just to wrap up a little bit on the market, tell us, are there enough players offering mortgage products today in the market? I understand you mentioned this 27,000 number. Is the Kenyan Commercial Bank leading this? Are there other commercial banks giving mortgages? How does it feel for the typical buyer who's looking to buy a house?
So we have a couple of institutions that offer mortgages in Kenya. We have banks that they have companies. Actually, we only have one housing finance company. We have some institutions that offer housing loans that are not necessarily mortgages, and those are SACCOs, or they are more on the microfinance part. Now, a number of banks do that, but it's significantly tilted towards the upper income. Obviously, the banks consider the lower income category to be far more risky, and therefore they don't extend. And then, of course, the issue of affordability also is key. Most of the housing that has been up in the market is very expensive. So, of course, only people who earn higher incomes can be able to afford that kind of. And that's why the growth of housing mortgages in the country has remained almost a growth of about 2% per year over the last 3 or 4 years. So there's actually really minimal growth in that regard. And I think that's why KMRC has come to the market to kind of support that.
Yeah. Just to wrap up, and I guess I'm comparing it with my experience in Zambia, Cameroon, Namibia. Who are the typical people or buyers who are getting mortgages? To give you my example, in Namibia, the typical mortgage goes to a civil servant, a government employee who has a government subsidy, and the banks are very used to being able to do that. What would be the experience that you have in Kenya? Is it also civil servants like teachers, nurses, police officers, or is it a little bit more higher middle income people who have private jobs?
So it's not too dissimilar with what you have in Zambia and Namibia. When the typical, so there are a couple of programs. So we have actually civil servant schemes in the country that has been running over time, where the government, which is the largest employer, providing civil servants with housing through certain financial institutions. So that's one. There are also a number of those who we call funded mortgages. And those are people who are in regular employment, and their institutions kind of provide mortgages to them. Okay. And the funded mortgages are actually the largest now because the interest rates are usually very low, because of course they are cash backed by the institutions are providing that cash back guarantee, and therefore that affords them to get at a very lower rate. But there are also a number of those that are provided by other institutions, and people who are in the high income, of course, can afford to take. But the largest, I think the majority is civil servants. Then the normal salaried people, especially who institutions provide mortgages, funded mortgages for that matter. And then to a smaller extent, you have those other guys, obviously, who have good income, who can afford to take up a mortgage.
Okay, amazing. Thanks for this amazing background. I think it gives a lot of context. I want to travel south. I don't know if there's any direct flights from Kenya to Zimbabwe, but through this conference, I think we can take one right now and go meet with Mehluli. And actually, maybe you can give us some background of your experience. I know you've had a very broad experience also in the region, but also maybe focusing it a little bit with your current experience and what you're seeing. Maybe tell us a little bit about the affordable housing finance in your sector, in your industry, so we can get a bit of a background for where you're coming from.
Great. Thank you, David. And yes, there is a direct flight from Nairobi to Harare. Good. So the two are very close. So your comment there was not out of place. So just a small correction on my bio. I think you stated that the chair of the Zimbabwe Association for Housing Financiers. I think just a small correction there, that I'm a past chair for that association.
Emeritus. Okay, cool. Thanks for that correction.
All right. So just a small correction. So just giving some bit of a background in terms of the affordable housing space in Zimbabwe. I think firstly, starting off with a similarity, just listening to Johnston's story, we've got a huge housing backlog, which has been created in part by a huge rural to urban migration. And this migration itself, I think as expected, tends to go towards the urban areas where we've got the greatest economic activity. Hence the housing backlog, when you look at it, and it's currently estimated at more than 1 million houses, is therefore more pronounced in the main cities and towns. And in the case of Zim, that would be Harare and Bulawayo. If you look at the demand side, the demand is definitely there, particularly for affordable housing. local authorities do maintain a waiting list, and that waiting list is reflected through that housing backlog. So definitely the demand is there. When one looks at that affordable housing space, good price points, I would say, would be in the 15,000 to 25,000 US dollar range, beyond which the affordability issues start to kick in a big way. What we've tended to see is that delivering, particularly on the lower end of that price range, is not an easy task, particularly given the cost of infrastructure. So what we've therefore seen as being helpful in some cases is the provision of service stands, which then leaves the buyer with a choice on what to build and at what cost and also at what pace. But I think it's also important to point out that, again, in the urban areas, there is a general shortage of serviced land. And as a result, supply is also limited. If I look at the mortgages space, mortgages are available within the country and are accessible to both government and non-government employees. But again, similar to Kenya, because there is an affordability story at play, the leaning also tends towards the middle to upper income. So in terms of the requirements, there would be the 25% deposit as an example, which requires some level of saving, which for the lower income bands, in some cases, proves to be a bit of a difficult hurdle to actually cross. The total number of mortgages in Zimbabwe at the moment is about 15,000. So again, when you look at that relative to the size of the population, which is about 15 million, it is actually a very small number, and suggests beyond mortgages, there are other financing structures that are being put in place to actually put up houses. There have also been efforts to extend mortgages to the informal sector, but this is made somewhat difficult by the absence of steady income flows. And given accounting rules that force recognition of non-performing loans after a certain period, formal lenders tend to shy away from this sector. And what we tend to see is that shorter-term loans, perhaps unsecured, tend to be more appropriate. And also just to note that the informal sector is actually quite significant in Zimbabwe. Then when one looks at typical mortgages in Zimbabwe in terms of term and interest rates, I think before I get into that, I think just some bit of background on the economic side. Just to mention that from 2009 to about 2018, Zimbabwe operated under a dollarized environment, which was effectively a multi-currency environment without a local currency. And the United States dollar was the most dominant currency during the period. So the numbers that I'll talk to are in US dollar terms. So in terms of tenure, the mortgage providers were looking at tenures in some cases up to as long as 25 years, which is very long and very competitive at an average interest rate of about 12%. Where we are now, we now have a local currency, and with inflation at the moment running at fairly significant or high levels, there is limited appetite by most corporates, by most banks to issue long-term mortgages due to the absence of long-term deposits. So mortgage activity is therefore subdued at the moment. Lastly, I'll talk about the number of players offering mortgage products. So barring the last bit that I've just spoken about around the current environment, I would say we've got more than enough players participating in the mortgage space. Zimbabwe has an association of housing financiers, which was previously the Zimbabwe Association for Building Societies. And the change in name was actually in recognition of the fact that even commercial banks now offer mortgages. So, bar the current limitations presented by the environment, I would therefore say customers actually have a lot of choice when it comes to mortgage financing. Thank you.
Thanks. Wow, Meluli, that is a very thorough, good background. I couldn't even jump in to interrupt because it was like you were answering what I was wondering next. It's quite interesting, and thank you for bringing us up to speed on Zimbabwe's maybe kind of USD denominated and newly more available at the local currency rates. And I'm actually curious, before I go on, are a lot of people actually taking US dollar denominated mortgages at a local level? Is that something that you've seen in the past couple of years? Maybe through your institution. I understand CAPS as a mortgage product, so if you could speak to that maybe as an example.
Thank you. So we're still in a bit of a transition, if I can call it that, from the dollarized environment into a local currency and a re-emergence of the United States dollar. So what we've seen at the moment is a limited uptake of US dollar mortgages, but we've continued, and so have other financial institutions. They have continued to offer foreign currency denominated mortgages, particularly to the diaspora market. So it's picking up pace, but still pretty slow at the moment, David. Okay,
very, very interesting. So I want to share with our audience a little bit some of the background for Diaspora and where some of the thoughts came to be for us around hosting this session. And then I want to jump in with both of you again, and maybe you can share a little bit about what you consider to be the Kenyan and Zimbabwean diaspora in your markets, and how present are they in terms of investments, and then we can start exploring from there with a few questions. You know, I've been working in Namibia now for about 7 years, and the Namibian diaspora is not something we think about often. Diaspora, for some of you who may be wondering, is this concept of people who are originally from this country that live abroad, whether they are working abroad or they've decided to take up residence abroad. And through this platform we started digitalizing in Namibia demand. And in digitalizing demand, we went to some of the smallest towns around the country where commercial banks in Namibia are currently not lending. And I had a lady come up to one of our sessions and say, listen, my sister lives in Canada, and she's wondering whether she would be able to register to buy a house. And I said, well, why don't you give your sister my cell phone? I gave her my card, and the sister called me in the evening and she said, I'm a Namibian. I've moved abroad about 10 years ago. I have a job at a mining company. I'm a scaffolder. I make 5,000 Canadian dollars a month, which is significant salary compared to the local buyers that we see here. And I want to invest. I want to have a property back in my land. I want to have a house where I come from. So I reached out to a few commercial banks and they all turned me down. They all said, listen, we don't give diaspora loans. And there wasn't really a program to bring investments from the diaspora back into town. And we started reaching out, spoke to CAF, spoke to the AUHF, and I was very impressed with some of the things I was seeing in Zimbabwe, by the way. And I was very impressed with some of the things I've seen in East Africa and also in Nigeria. And I realized there is a new movement for where we may be going with understanding how we can engage with the diaspora. Just to give you some thoughts of where I may be thinking around this, and then I want to bring it back to the both of you. You know, I'm wondering, could the diaspora be investing in housing projects on an equity basis? So could they be investing in their own housing projects, similar to Meluli, you were mentioning in Zimbabwe, that people have to put a 25% down payment. In Namibia today, you can get 100% home loan from a commercial bank if you're a local employee with government backing and subsidy. But if you're a foreign employee, as a Namibian living abroad, let's say a diaspora, in the diaspora, you cannot even really apply for a home loan. Now, when I start seeing in the markets around Southern Africa, specifically in Zimbabwe, I'm speaking about, there are products that I started to see where as somebody living in the diaspora, you can actually put a down payment towards your house. You can find services that are to help you manage your construction from abroad. and you can even make USD denominated payments. So even though we see that as a mortgage to someone in the diaspora, there's a twist to it where we are seeing it also as an investment in housing. Also, I've seen American Home Builders of West Africa, one of the companies that is a member of the AUHF or has participated in some of the sessions, also trying to use diaspora money for people to invest back in their homes. So before we jump into some of the questions I have about diaspora investments and how we can use those to enable housing projects, maybe we can start this time with Mehluli, and you can tell us a little bit about how do you see the Zimbabwean diaspora? Is there a Zimbabwean diaspora? Meaning, are there people living abroad that engage and send remittances? And do you think they are important stakeholders in your market? I want us to try to define that first. Are they important stakeholders in your market?
All right. Thank you, David. And yeah, the diaspora. I think those are very important and valid questions that you're asking. So within the context of Zim, it's estimated that we've got more than 3 million plus of our population in the diaspora, and our population is not that huge. You're looking at about 15 million. So 3 out of 15 is a very significant percentage, which makes the diaspora a very important and, like I said, very significant segment, where they are largely in South Africa, our close neighbor, and also Europe, but they are also spread pretty much across the globe. But
they're here also in Namibia, eh? We have a lot of Zimbabwean colleagues in Namibia, and they add great value to the economy. So have high respect. But sorry, go ahead.
Great. And the fact that they are adding value, David says they are earning an income, and that income is something we should always have an interest. Where there's an income, we can always provide a product or a service. And I think it does then highlight or bring to the question that says, is the money there? And you mentioned remittances. And in the Zim case and Africa in general, I think one would say remittances are actually very significant. Just for Zimbabwe, the first half of this year, we received about 400, just under US 400 million through formal channels. And we know there is also some level of remittances that comes through informal channels. And 400 million in 6 months is not an insignificant amount. So there's definitely, again, a case that says we should be thinking about the diaspora. Do they have an interest in housing? There are no formal stats to support a response to this question, but personal experiences suggest that there is a fair bit of construction that is actually done by those in the diaspora, be it through a relative or a friend. And this is either done as a comeback home plan or as an investment. When I look at the Zim case, there have also been some developers who have developed properties specifically targeting the diaspora. And I know they've been a notable level of success in terms of them actually getting the diaspora to take up those units. I also know most banks, I think from reading financial results from listed banks, that most banks are actually targeting the diaspora as a segment, again confirming that it is an important segment which can't be ignored. And I think if one then turns it around and also says, for someone in the diaspora, is there a case for them to be looking back home? And I think the answer is yes. I think when one looks at the sort of nominal return, if I can call it that, in Africa, it's typically higher than what one would get in the developed world. And for us in Zim, particularly under the dollarized environment, it was very easy at some point to get yields, rental yields in the sort of 8 to 10% range, which if you compare to what someone would get in Europe, that would be a fairly significant return. The risk side, however, does need to be given consideration, particularly if the investment is in local currency. But there's definitely, in our case, a very strong case to consider the diaspora, David. Thank you.
No, this is amazing. For those of you who may have like checked your phones while Mehluli was talking and missed some of the stats, I mean, potentially 20% of the Zimbabwean population, plus or minus, living in the diaspora, $400 million formally recognized to have come in the form of remittances. And, you know, here's a challenge. Can we find out how much of that is currently going into housing? And for those of you who are investors, financiers in the housing sector, to start even thinking what percentage of that cake can start going into housing in the coming months. This is an amazing window, not only of opportunity, but of understanding. So thanks. I mean, it brings a lot of context to just, if somebody leaves this session with that statistics, to go regroup into their business plans or into how to engage with Mehluli, his organization, and his colleagues in Zimbabwe, I think that would just be enough to have taken out of the whole conference. Johnston, jumping to your side a little bit higher again, we take a flight back to you. Maybe can you tell us, you know, give us a little bit about, you know, is there a Kenyan diaspora? Would the Kenyan diaspora actually send money home? Are they interested in affordable housing for themselves as an investment, or even for themselves to have a primary home? Can you maybe tell us a little bit about that, and also maybe from how KMRC sees that?
Thank you, David. I think I just also want to provide some context and potentially throw in some numbers in relation to the Kenyan diaspora. Now, available data we have puts the diaspora remittances in Kenya in 2019 at around $2.5 billion US. In 2018, it was around $4 billion US in terms of remittances. Now, when you look at certain statistics provided by a number of institutions, for example, according to the African Economic Outlook 2020 by African Development Bank, between 2005 and 2018, remittances to Africa rose from $33.4 billion to around $82.8 billion, which accounts for about 3.5% of Africa's GDP. So you can see the kind of contribution these guys make out there. According to COMESA, there's a COMESA special report on diaspora remittances. The leading recipients of remittances in the COMESA region during the 2019 were Egypt at around 26.7 billion, Kenya at around 2.8 billion, Tunisia 1.9 billion, the DR Congo 1.8 billion, and Zimbabwe at around 1.7 billion in 2019. Now, in the recent past, I think there has been discussion, including by the World Bank, around the remittance flows to sub-Saharan Africa, where they indicated that there will be a drop by about 23.1% from around 48 billion in 2019 to around 37 billion in 2020. And this is all attributed to the COVID-19 economic crisis. Now, back to Kenya. Remittances in Kenya are now the biggest source of foreign exchange, actually ahead of tourism, tea, coffee, and horticulture exports. Most of the remittances came from the United States and Britain, but we also had near home contributing a sizable home. Uganda, for example, is the third biggest source of remittances to Kenya, at an estimated of $9 flowing in 2018. Now, we followed closely by Tanzania, Canada, and Australia. Now, because of the huge sums involved in the remittances, Kenya now recognizes, diaspora remittances as an important contributor to the country's growth and development. To the extent that part of, or a majority of this remittance goes into housing, is an issue we don't have any form of data that can be able to guide us into that. However, what we obviously get from conversations around is that the people in the diaspora contribute somehow indirectly, even without numbers. Meluli was talking about, like they contribute into investment in housing, either as a strategy to return home or, supporting relatives at home to own a home. Some will actually invest in housing as a form of an investment. They consider housing as a long-term investment, and therefore people put in investment for that. There is, however, no clear statistic. Others, in fact, buy land for purposes of incremental housing development. I've heard of a number of diaspora people who have formed a SACCO, for example, a SACCO that is involved in investment in land. They buy land in a certain area and they invest into housing. And that is a potential contributor, although it's a very low scale, but it's a potential contribution
100%.
into housing. So when you look critically at what that means, is that it needs a bit more, a lot of joint effort to get that going. Yeah. Now, in Kenya, because of that recognition, the Ministry of Foreign Affairs in Kenya actually developed what you call a diaspora policy with a number of intentions. Some of the intentions include, in fact, develop and implement, which means developing and implementing strategies to engage, empower, and mainstream Kenyans abroad into national development process. When you look at that policy, it also talks about mobilizing Kenyans abroad to form town, cities, or county-specific umbrella associations, which have a national outlook, as well as regional global umbrella associations for effective representation and engagement. And then they also tend to develop measures to enhance protection of Kenyans abroad. So apart from just contributing and making them available, they also tend to form some form of community for purposes of enhancing their own protections where they are, and as well of necessity actually establish the necessary institutional mechanism for coordination and administration affecting Kenyans abroad. Now, there is a lot of concerted effort by government and a number of institutions. There are a couple of banks actually and other financial institutions that have recently been doing some outreach, trying to get a hold of the diaspora. I know of a number of engagements by an institution called Ken Invest, which is an institution that is involved in mobilizing investments in the country. Yeah. They have been doing a lot of outreach to Kenyans to get them to invest back home. And that means, collectively trying to get a hold of a majority of those Kenyans to think about their investments when they're investing home. The kind of investments, in fact, you see in Sub-Saharan Africa, the return is greater than if you invest in Europe, for example. Because that's why
which is exactly what Meluli was alluding to just now. Yeah.
Absolutely. So with that, I think that kind of provides a kind of background that, diaspora remittances play a significant role in a country's development, and therefore there's a lot more effort to be put into that, so that then we see that investment go into housing.
So wow, I'm actually, after hearing the two of you, I'm actually more excited now than I was about this topic. I want to catch us up. So I mean, both of you have agreed that there are two viewpoints so far, and there may be others, but two key ones that we pick up from the diaspora when they think of housing. One is a strategy to return home. Another one is to be able to assist and support their family. Tertiary one that we could start seeing, but there's no real statistics yet, might be also to have an investment, not necessarily to return. So you've both pointed to both of your countries and definitely other countries in the area. You see massive contributions to GDP. I actually just looked up Kenyan GDP, and you're right, it's about 3%. What the number you gave in contributions, which is about 2.8 billion US dollars that came in, that represents just about 3% of that 99 billion GDP for last year. So it is incredible that amount of money is coming back into the market. I think something I've picked up from what you both have said now is that there is no data necessarily formally out there to tell us how much of diaspora investments is going into the investment of housing, or whether it's personal or for commercial purposes. And I think that's an interesting challenge for all of us to start thinking about as organizations in collaboration with CAF or with the AUHF, is how much of these remittances, how much of diaspora money has been coming in? Can we formally start getting that data? And also, can we start actually encouraging some of that money that is coming in into remittances to start coming in? So I don't think we have too much time, and I want to maybe pose two questions. Maybe I want you to spend about a minute or two telling me about the first one. Johnston and Meluli, this question is for both of you. Is there a product today in any of your organizations that you lead that allows for you to engage with diaspora people in affordable housing investments, whether it's at a personal level or a mortgage level or at a construction level? Meluli, maybe you can kick off on this one.
Thank you, David. So quickly on my end, yes, like I said, we do offer mortgages to the diaspora. We also encourage them to open bank accounts with us. And when one looks at the other players in the financial sector, there is a very significant concerted effort to actually do business with the diaspora. So like I mentioned earlier, when one looks at the plans for most entities, particularly those in the listed space where this information would be public, the diaspora is definitely a segment that is being considered. So yes,
dive in a little bit deeper in there. So say I'm a Zimbabwean living in Namibia. I'm making $2,500 US equivalent. I've got a good salary. I'm a quantity surveyor. And I call CAPS and I say, listen, I want to buy a house back at home. What would be that product? So what would be maybe my down payment? What would be my tenure, my mortgage, my interest rate? Is it similar to what you mentioned at the beginning? Or is it different?
Similar to what I mentioned at the beginning, David, where we're looking at a deposit of about 25%. The tenures previously, we could go as high as 25 years. But at the moment, I think on average, across the financial sector, you'd probably be looking at about 10 years, I would say. In terms of the interest rate, because the risk factors are still pretty much the same, you'd be looking at an interest rate in dollar terms that's in the 10 to 12% range. But definitely lots of consideration given to the diaspora.
Amazing. So 25% down payment, maybe around 10 years, 10 to 12% USD denominated. There's a product. I like it. I don't see that in a lot of markets. What about you, Johnston? If we jump to you, can you tell us a little bit, maybe if there is a product and some of the breakdown, maybe similar to what Meluli was giving us?
Absolutely. So thank David. We have a product. So, but when you look at KMRC, we are a wholesale provider of financing for purposes of ownership. Now, however, the diaspora can contribute in housing development, supporting the supply side, which indirectly potentially also supports KMRC, because we drive mainly affordable housing from the demand side, but the supply side is also very critical to us. And the diaspora can invest in housing development, and that is potentially a product that will be made available. But how can they do that? That can potentially be done through mobilization of funds from the diaspora, and that can be done through a diaspora fund, for example, where funds are pooled from the diaspora community under management of a professional fund manager on behalf of the diaspora investors, and that can be done, and that funding can be used for housing development to support the supply side.
But more fundamentally, you say it can be done. Here's an interesting question: is it being done?
Absolutely not at least at the moment.
Okay.
So that's why I'm saying it can be done on that. But then we have at KMRC, we have a product where the diaspora funding can be invested in, and that is in housing bonds, because KMRC issues bonds, and from time to time, actually, it will potentially be an issue of record in the capital market, and that way, any diaspora investor can put in money in that bond and earn an income, obviously out of that bond. The housing bonds, the proceeds, of course, will be used to finance housing, or mortgages. You can also have, because we also intend to issue a green bond, for example. That's also another key avenue for diaspora investment. Proceeds will certainly be used to finance new or existing housing projects that generate climate or other environmental benefits that conform to green guidelines and standards. So
well, that's amazing. I want to say your housing bond concept could be an entire session of this conference, because yes, diaspora people can be investing, but it sounds like a great tool to actually be able to do more of the refinancing around the markets. Sorry, I interrupted you, but we have a few minutes, and I want to get to two more things. I want in a few words from each of you, what do you think, what do you think is missing, or where do you think it could be a negative thing, like maybe you think it's missing, or where do you think we could be in a year after maybe having started this conversation in terms of bringing in more diaspora investments, whether it's on the demand or the supply side? And Johnson, you were giving some great ideas. I think partly you've given the answer. Maybe we can start with you in case you wanted to add anything. You mentioned that diaspora funds can be managed professionally. Go ahead.
Absolutely. So creation of a diaspora fund is one thing that we need to develop, so that this enables effective pooling of diaspora funds for investment purposes, with obviously having professional managers managing that. But we also potentially need to establish an enabling regulatory and business environment to encourage more diaspora flows. Diaspora policy that has been developed by our Ministry of Foreign Affairs is a good step, but we now need to have a more practical regulatory and business environment that will encourage a lot more investment. You don't want to lose your hard-earned income, and you have to have very clear visibility of where your investment going, and that you are very certain that when you do invest, you can get your money back. Yep. Then we also need some kind of coordinated strategies for harnessing remittances for housing purposes. We don't have that at the moment, but there has to be a deliberate effort to harness those remittances. I know Meluli mentioned about, the flows coming in somewhat, sometimes indirectly, without following the official channels. But that is, and I know that can potentially have a lot of flows coming in that way. But you need channels that are more defined, that are very key, so that they actually add into the statistics. And that you can only do when you have a clear regulatory environment, and you have access to information on investment for investment purposes.
Amazing, thanks. I want to jump to Meluli. You actually wrapped up nicely with some of the thoughts he had, and I also believe Zimbabwe has some of the leading engagements with their diaspora. So maybe Meluli, what do you think is missing, or where do you think we could be or should be in a year in terms of, if we meet again, what could have we done better with the diaspora?
Great, thanks, David. And Johnston has done a great job of actually highlighting what needs to be done. So just to add, and it's going to be more complementary of what he has put forward. I think the diaspora, it appears they've got some specifics in terms of what would attract them in terms of housing. So I think for those in the development space, there is some work that needs to be done to understand what is it exactly that the diaspora would want, what would they actually buy as a housing product, if one can call it that. And I think once one has that understanding, they can then develop to that taste, and that will then help with the demand side, because oftentimes you can do the development, but the offtake can be something else, and you always want money to come back as quickly as possible. 100%. I spoke about bank accounts earlier, and Johnson made reference to that, in that we need to pull deposits from the diaspora, and I think we need to look beyond bank accounts and actually say what other financial solutions would suit the diaspora. Because at the end of the day, what we're just trying to do is get money to flow into the country and through formal channels. And once we pull those deposits, they can support lending, perhaps not to the diaspora itself, but other sort of individuals within the economy. And once those deposits per individual have reached a certain threshold, can then be used as a deposit into a property. So I think the message there is, beyond bank accounts, beyond providing a mortgage to someone in the diaspora as of today, let's also think about other financial solutions or other financial products that are relevant for the diaspora, so that we get the flows in. I also agree on the capital market side. Diaspora bonds or housing bonds need to be considered. And when one looks at that aspect, I think the only bit that I'll add is you clearly also then need a supportive macro environment, particularly when you issue some of these bonds in local currency. Local currencies tend to be weak, and over time, what someone invested as the equivalent of $1,000 can actually end up being a lower amount. So if it's going to be a foreign currency denominated instrument, I think seeing what role can other participants play, e.g. government, in terms of providing any guarantees where possible. And I think just talking a bit about government as well, I think just a sentence there. I think investment incentives, tax breaks, I think where possible, those would also assist. So I think looking 1 year from now, I think more data, if we've got more data 1 year from now, that would be great. If we also have in place more financial products, more financial solutions that attract the diaspora, that would also be a very big positive, David.
Yeah. Wow. Amazing. Maluli and Johnston, this is the reason you're both leading very impressive organizations, because you are thinking not only as leaders of your organizations, but as influential members of the future of what we want to create for our countries. And I think that not only your initiatives, but your thoughts about where you want us to be, not only make sense, but build a bright future. And with that, I want to wrap up with one last question for each of you at a more personal level, which is, you both lead very important organizations that have an impact on a lot of people, not only your clients, but your employees and your colleagues that show up every day to carry the flag of your mission. So I'm curious, you could share with all of us today, we're all in similar positions, always having some of the similar feelings, maybe to bring you back to that human level after you've given these great speeches and great comments. What keeps you up at night related to your organization? And what gets you excited in the morning to wake up and go fight? Maybe Mehluli, we can kick off with you, and then we'll wrap up with Johnston and say thank you for everyone who was here today.
Great. Thank you, David. So what keeps me up at night? I think COVID has been a very significant feature when one looks at 2020. And for me, the big question at the moment is it something that we'll need to deal with in 2021? So we've done well as a business, and so has everybody else. I mean, this conference bears testimony to that in terms of remote working, meetings in the virtual world. But the need to physically interact still remains very critical, be it with staff, be it with customers, even for us that are in the service industry. So while there's been some level of opening up and some return to normalcy within the Zim context, there's definitely a huge impact on the economic environment, and in turn, an impact on the customers we serve, particularly given the linkages that we have with the rest of the world. So in this session, we've talked about the diaspora as an example. So I could happily look at the Zim stats only, but we've got 3 million people that are elsewhere in the world, and their context is still within this sort of COVID space where some lockdowns are coming back in certain jurisdictions and so on. So that does keep me up at night. What is that 2021 story going to look like, David?
Yeah. What gets you excited in the morning? Leave us with a positive note.
Don't a very big positive, definitely, and we need that. So CABS is part of the Old Mutual Group, as you said right at the beginning, and Old Mutual celebrated its 175th birthday this year. So wow. I'm therefore very happy and always very excited to be part of a business that has such a very long history, and without a doubt, a very long future ahead of it. So when I wake up each morning, for me, It's that waking up with a view to play a part in serving our customers, understanding what problems they have and what role I can play and my team can play in helping solve those problems. And in the process, create a great platform when one looks at cabs for those that will come after me, David. Thank you.
Ah, Meluli, thank you so much. And I don't even want to comment because I want to leave that vibe going on to Johnston. Johnston, we fly back to you.
Thank you, David. I think before I say my parting shot, there's one key issue that I think we needed to bring out, the fact that we need to create awareness to the diaspora for them to understand the investment opportunities that are available in our countries. There are a lot of them, not least in housing. Now, we also talked about the lack of accurate and meaningful data. With technology, we can be able to create that. And the best way to do it is to remove the informalities in the remittance channels so that then we can be able to aggregate the data that comes very quickly for us to be able to use that for making decisions. And lastly, about addressing remittance costs, which I think Meluli has made reference to about providing concessions for the diaspora flows to come in. Gives me away, very related to what Meluli said. The effect of COVID in the recent past has just made life unbelievably unbearing. And this is particularly to me because a number of financial institutions are suffering from the need for customers, especially to request for accommodation in their mortgages. Now, the challenge we have with that is that financial institutions are incapable or unable to use those mortgages to leverage for purposes of getting KMRC financing. And that slows down our ability to be able to influence or to grow the mortgage market. And that significantly keeps me awake because our intention is to significantly dent the deficit in affordable housing in our country. And that we are committed to do.
Yeah.
However, what makes me very happy to wake up every morning, I have such a great team that is really, really happy to. We want to make a difference. And I'm very happy to be part of that great team that wants to make that great difference. We want to bring a home to the people in Kenya who will not have otherwise ever thought they're going to get that home. And that makes us very happy.
Wow. Meluli and Johnston, you are both great leaders. I admire you. I admire you for what you believe in and how passionate you are about what you described today. I hope that our peers and colleagues that are listening in today can share your thoughts, can share your concerns, but also some of your excitement. And I really hope that, as part of this conversation, we can kick off and create webs of conversations about the diaspora, how to enable policy, which is one of the great takeaways we had, how to also raise awareness to people in the diaspora about the products and services and investments that there are. And more importantly, how to channel those investments properly and manage them once they are on the ground so that we can actually give a return to the people who believe in these investments so that it can encourage others to continue to do so. Thank you so much for sharing this platform with me. Thank you for your thoughts. Thank you for your insights and your time. And thank you for the AUHF, the organizers that allowed us to create this slot of time to actually touch on such an important issue that we don't always think about.
Thank you, David.
Thank you, David. And thank you, Meluli.
Yeah, and like Meluli and Johnston said, I hope we can touch each other and see each other soon enough, maybe at the 37th AUHF. It would be nice to actually touch base like last year.
Absolutely.
Absolutely.
Great.
Thank you very much.
All right.
Thank you, guys. See you soon.
Cheers, guys.
Thank you. Yes.